Hey guys, what if I told you that two obscure government-sponsored companies Fannie Mae and Freddie Mac quietly controlled over half of America's entire mortgage market? Have you ever wondered why, in the middle of the 2008 financial meltdown, the US government suddenly poured $187 billion into rescuing them, the largest bailout of any entities during the crisis? How did these two big-to-fail giants, created to help everyday Americans buy homes, end up nearly taking down the whole housing system? And why are they still under government control today, more than 17 years later? Buckle up, because we're rediving deep into the insane story of Fannie and Freddie, the twins, that fueled the housing bubble, exploded spectacularly, and changed American finance forever. Let's break it down step by step with the shocking truths everyone needs to know. First huge question: what exactly are Fannie Mae and Freddie Mac, and why were they so massive they couldn't be allowed to fail? Fannie Mae, short for Federal National Mortgage Association, was created way back in 1938 during the Great Depression to make homeownership more affordable. Freddie Mac, Federal Home Loan Mortgage Corporation, came in 1968 to compete with Fannie. Together, they're government-sponsored enterprises, or GSEs. They don't lend money directly. Instead, they buy mortgages from banks, bundle them into securities, and sell those mortgage-backed securities, MBS, to investors worldwide, guaranteeing timely payments. By 2008, these two controlled a jaw-dropping $5.5 trillion in mortgage debt, roughly half of the entire $12 trillion US home loan market. That's bigger than the GDP of most countries. Investors loved their MBS because of the implicit government guarantee. Everyone assumed Uncle Sam would back them if things went wrong. That let Fannie and Freddie borrow money at super low rates, expand aggressively, and dominate the market. But that same assumption became their Achilles heel. When the bubble burst, the world realized they were leveraged up to 100 to -1, in some cases, meaning a tiny drop in home values could wipe them out completely. No wonder regulators panicked. Next, how did their obsession with risky loans turn them into ticking time bombs? Starting in the 1990s, and ramping up under the Bush administration, both Fannie and Freddie were pushed hard to expand home ownership, especially among low-income and minority borrowers. Noble goal, right? But it led to disaster. By 2007-2008, a massive chunk of their portfolios was loaded with subprime and ALTA loans, the risky stuff with low or no documentation, adjustable rates, and high default potential. Freddie Mac alone had over $500 billion in subprime and ALTA exposure. Fannie wasn't far behind. They lowered lending standards dramatically to hit affordable housing goals set by Congress, goals that required them to buy more loans from lower-income borrowers. Executives chased profits and bonuses by loading up on private label MBS, the really toxic ones packaged by Wall Street, not just the safer conforming loans. When house prices peaked in 2006 and started plunging, defaults skyrocketed. Fannie reported a $29 billion loss in 2008 alone. Freddie lost $50 billion that year. Their capital reserves, already thin, evaporated by summer 2008. Their stock prices had crashed 90%. Investors were dumping their debt, and they couldn't raise fresh capital. The housing market was freezing, and without Fannie and Freddie buying mortgages, banks stopped lending entirely. It was systemic collapse in slow motion. Now the terrifying moment. Why did the government have to step in with the mother of all bailouts? On September 7, 2008, just days before Lehman Brothers fell, the Treasury Department placed both Fannie and Freddie into conservatorship. That meant the government took control, wiped out common and preferred shareholders, and committed unlimited funding to keep them alive. The actual cash injected a staggering $187.5 billion over the next few years, the biggest bailout of the crisis, dwarfing even AIG's $182 billion. Why so much? Because if they collapsed, the global mortgage market would have seized up completely. Foreign governments like China and Japan held over $1 trillion in their debt and MBS. A default would have triggered worldwide panic, crushed home prices further, and turned the recession into a depression. Treasury Secretary Hank Paulson later said letting them fail wasn't an option. The fallout would have been catastrophic. Instead, the government got senior preferred stock, meaning taxpayers got paid back first with a 10% dividend. And guess what? By 2012, Fannie and Freddie started turning massive profits again, as the housing market recovered. They've paid back the Treasury over $300 billion in dividends, more than the bailout amount, so technically, taxpayers made money, but the control remains. They're still in conservatorship today, in 2025, operating as public utilities under FHFA oversight. The shareholder nightmare. who got completely crushed in all this. Common and preferred shareholders got obliterated. Before the crisis, Fannie's stock traded above $70, Freddie's above $65 by conservatorship. Both were under $1. The government's takeover included warrants to buy 79.9% of common stock at a nominal price, effectively diluting everyone else to near zero. Billions in market value vanished overnight. Hedge funds and big investors like Bill Ackman fought in court for years, claiming the bailout terms were illegal takings. But courts sided with the government. Preferred shareholders, many of them, community banks and insurers, lost their dividends and principal. It was one of the harshest wipeouts of the crisis, all to save the system. While taxpayers eventually profited, private owners got nothing. Finally, the lingering question: why are Fannie and Freddie still in government hands, 17 years later? And what does it mean for us today? Every administration since 2008 has talked about reforming conservatorship, privatizing them, or creating a new system. But nothing major has happened. They remain quasi-nationalized, sending profits to Treasury, limited in how much risk they can take. Housing advocates fear privatization would raise mortgage rates for average buyers. Wall Street wants them fully private again for bigger profits. In 2025, they still guarantee about 70% of new mortgages, keeping 30-year fixed rates affordable. But the implicit guarantee is now explicit. Taxpayers are on the hook forever, unless Congress acts. The bailout proved the system works in a crisis, but at what cost to moral hazard? Banks, no big players get saved. So, which part shocked you the most? The $5.5 trillion empire, the $187 billion rescue, or the fact we're still paying the price today? Drop it in the comments. I read every single one. If this blew your mind, smash that like button, subscribe, and hit the bell for more wild stories from the dark side of finance. Thanks for watching, your absolute legends. See you in the next one. Stay informed out there.